more than 40 years, and he is the founder of Chaikin Analytics. Now, over his career, Marc has been a Wall Street trader, a stockbroker, and an analyst. And he is the creator of the renowned Chaikin Power Gauge, as well as 3 technical trading indicators, the widely used Chaikin Oscillator, the Chaikin Accumulation and Distribution Indicator, consistency of money flow. Now, these are all indicators that are industry standards and are found on most trading platforms in the world. Marc regularly appears on CNBC, Bloomberg, Fox Business News, and is a contributor to NASDAQ, Forbes, and MarketWatch. And with that, please join me in welcoming Marc Chaikin to the Trading Pub and his topic today on 5 steps to increase your trading profits. So, Marc, welcome to the Trading Pub. The floor is now yours.
Thank you very much, and welcome everybody. We will talk about 5 steps, but I have changed the title here to reflect what's going on in the market. So although the content's going to be the same, we're going to skew it in a slightly different way. So this is about how to profit in a down market, which involves playing defense well. And that also speaks to the volatility that we're experiencing in the market. So a little bit of housekeeping. Chaikin Analytics is not registered as a broker-dealer or investment advisor with any state or federal regulatory agency. None of the stocks we use are meant to be recommendations to purchase or sell. This information is for this webinar, generic in nature and educational purposes only, and you bear sole responsibility for your investment research and decisions. And those are the only hedges that you're going to see in this presentation, because this is powerful stuff and I really believe in it. Now, most of you know me as a market technician looking at money flow through the Chaikin money flow and Chaikin oscillator. This presentation, which is somewhat similar to the theme of the last one, is how you can combine fundamentals with technical analysis to increase your trading profits. Now, we do that and we help you in a down market by helping you zero in on vulnerable stocks and find short sale and put candidates. Now, a question came up in a webinar I did last night. How do you know it's a down market? Well, you know it's a down market when you can't sleep at night because you're concerned about your investments that are trading below their key moving averages, like the 50, 100, and 200-day moving averages. So this is an art, not a science, and it's very important to realize that down markets are a different breed, and so this webinar is going to be skewed toward how you protect yourself and make money in a down market and take advantage of opportunities. So Chaikin Analytics helps you find profitable trading opportunities by allowing you to know the fundamentals without being a research analyst, know the technicals without being a market technician, and profit from a proven quantitative model, which is what the Chaikin Power Gauge rating is, without having to do the math. And then finally, we help you pinpoint profitable entries and exits with Chaikin buy and sell signals. Now, you could be creating your own buy and sell signals. We're just going to suggest a series of these that we think work very well. So as a little sort of advanced look at the type of stocks we're going to use here as examples on the downside, we've got a 1-year chart of Sears Holdings. At the bottom of that chart is the Chaikin Power Gauge rating, which goes from red to green, indicating whether a stock's potential is bearish or bullish over the next 3 to 6 months. And then above that is the relative strength indicator. We've converted a number into a picture, converted it into a red-green heat map, and look at this little yellow zigzag. This is going to be critical to a very unique and powerful concept that we're going to expose to you within the course of this webinar. And then finally, we've got examples of the sell signals that could have helped you get out of a stale position in Sears and find put buying opportunities. So Sears is sort of the poster child for what we do well, and we're going to see multiple examples on both the short and the long side. Now, the biggest problem we face today as investors is information overload. The previous speaker referred to the fact that most people don't have a lot of time. But the fact is, you still have to put in some work. I respect the presentation, but we're all about giving you the tools, teaching you how to use them, and also giving you some guidance in the form of our weekly market insights, where we have a bullish or bearish stock of the week, and we highlight strong and weak industry groups. But the key to this slide is right in the middle. How do you focus in the age of distraction? And Chaikin Analytics is all about focus. Our solution to information overload is Chaikin Analytics for either desktop or iPad, and we will have a special offer for you at the end of the webinar. Now, all of this is about focus. If you've read any of Jack Schwager's Market Wizards books, you know that everybody he interviews has a game plan. They stick to it. They know why they're doing it. And that enables them to focus on what's most critical to achieve success with their game plan. Focus leads to conviction. That's another theme of the Market Wizards books. And we'll see many examples in this presentation where the market tests your resolve. The headlines are bearish. There's panic in Wall Street. And you need conviction in your methodology in order to withstand that, not get shaken out of positions and not miss opportunities. That's really critical. So the five-step method that we talked about is encapsulated in this pyramid. At the top of the pyramid is the Chaikin Power Gauge rating. We synthesize all of the important fundamental factors down to a power gauge display that looks like the gas gauge on your car. It goes from very bearish or red to very bullish. And we're going to get into what's involved in that in a minute, because in order to buy into the Chaikin methodology, you've got to believe that the power gauge rating works. Underneath that, the second important concept at the top of the pyramid, industry group strength, and then ETF strength, because sector and industry group ETFs are doing a really good job at indicating where money is flowing in the marketplace. Now, industry group strength has been documented by Zacks, Investors Business Daily, and Standard & Poor's. Basically, strong industry groups put the wind at your back if you're on the long side, and weak industry groups are in-your-face headwinds that help you make money on the downside, but if you're in those industry groups on the long side, you've got trouble on your hands. At the bottom of the pyramid are 5 hand-picked proprietary technical indicators that are very compatible with the fundamental model. Now, when all I had was technical indicators, I always said that the institutions who follow the fundamentals drive the markets, but using Chaikin Money Flow, you could monitor the tracks of the big investors and know what they were doing. We're going to zero in on relative strength and money flow, and right in the middle are the key 6 pairs of Chaikin buy and sell signals. Now, as I said, you may have your own pet buy and sell signals. That's great. You can use them with these 2 key resources, the power gauge and relative strength. So the Chaikin power gauge is a simple display, but it's not simplistic. It's like a Ferrari, it's like a Chevrolet with a Ferrari engine under the hood. And the reason it works, the reason it's a great predictor of a stock's potential with a record of success over the past 4 years at indicating stocks that are going to beat the market or underperform badly, is because these 20 factors grouped into 4 components are based on what institutional investors look at every day. So the financial metrics, 35% of the model, which is 85% fundamental, that's what Warren Buffett looks at. The earnings, Jim Cramer. The technicals, only 15% of the model, and then expert opinions, short interest, insider activity, earnings estimate revisions. These are the shorter term factors that drive stock prices. Financials don't change very much, but just to key into one of them, price to sales ratio. It's the most important financial metric, because if you pay too much for $1 of revenue, you're on a high wire act, and anybody who's buying Tesla or trading it from the long side or any of these cloud computing stocks or some of the weak stocks we're going to look at like Whole Foods and Sears understand that paying too much for $1 of revenue puts you on a high wire act, and as soon as something goes wrong or the market changes character as it may be doing, you've got a problem. So the performance of the power gauge is powerful. In the back test, average stock in the Russell 3000 with a very bullish rating, 428 stocks, up 23% a year. The average very bearish stock, 428 of them, was down 3%. That's what's going to happen in a down to bear market. The weak stocks, the very bearish stocks, are actually going to go down. Now, what's happened in the last 3 years since we introduced the power gauge rating? Because we've been in a 5-year bull market, even the very bearish stocks have gone up. They're up 10%, which is a third less than the S&P 500, which is up 15%. But the very bullish stocks are up 20%. You don't want to be bottom fishing or stuck in the bearish stocks. They're going to underperform. They cause you to lose sleep. and they affect your mood and your psychology and your ability to focus on the opportunities at hand. So the performance in the real world has matched the performance in the back test. The second concept that works with the power gauge rating is Chaikin relative strength. We compare a stock to the overall market over the past 26 weeks. Relative strength is displayed as a red-green indicator, so it's very simple to understand. It's not a number like you see in Investor's Business Daily. And it's very important to know when it changes character, and that's going to be the secret combination that you're going to see in a minute. Fluctuates between 0 and 100. It measures the persistency of a stock's performance relative to the S&P. We use the spider for that. And that's really important. And most important, it stands alone as a bullish or a bearish indicator. So even if the power gauge is neutral instead of bullish, if relative strength to the market is strong, then that's a stock you may want to trade on the upside. And the reason that relative strength is important is because institutional investors are measured against a benchmark. It affects their compensation. It affects their assets under management, because if their stocks are underperforming the market, they're going to lose assets. And that means that superior returns come from stocks that outperform the market. Now, that may look like Monday morning quarterbacking, but it's really not, because stocks that are outperforming the market today will outperform the market over the next 3 to 6 months. It's been proven. Obviously, at tops, that's not the case, but in big bull or bear markets, really powerful to know that even in bull markets, down stocks have persistent underperformance. So let's look at what we call a classic bear. We're using Sears as our poster child. Power gauge rating is bearish. You know that at the bottom of the screen. It's red, not green. Trend is down. How do you know a stock's in a downtrend? It can be as simple as lower highs and lower lows. And we see that in Sears. In this case, it's also below our 200-day double smooth exponential average, which is the brown line, and that's a powerful trend indicator. We want to see a stock with weak performance relative to the market. We know that because it's red right above the power gauge. You don't have to look at the numbers, and you can see when it changes direction. Finally, we'd like Chaikin money flow, which measures the institutions moving in and out of a stock, to be red, and we see plenty of that here in Sears. We're going to blow that up in a future slide. And then we'd look for a sell signal in Chaikin Analytics as an entry point. They're not precise pinpoint buy and sell system, but they do identify low-risk entry points. In this case, we're looking at an overbought sell. We'll get into what they are. We fully disclose the rules on our website, so it's not a black box, and it makes sense logically. Now, 90 years ago, Richard Wyckoff developed this idealized pattern about the way stocks go down. Anybody familiar with Wyckoff? He's still being taught today at Golden Gate University and used by very, very prominent market analysts. And a lot of you out there may be familiar with Wyckoff. 90 years ago, Richard Wyckoff, who was a great strategist, market technician of his day, developed this idealized way of the way stocks go down, and then we'll see the upside. As you look at the examples, keep this in mind, because unintentionally, the examples and the signals help pinpoint this wonderful Wyckoff pattern. Really important, the reason I think this is important is that something that was developed 90 years ago is still working today, and the Chaikin power gauge rating and the relative strength in our signals help pinpoint these particular action inflection points that Wyckoff identified. So I said that we were going to share an important secret with you. The important secret, and it's very important in a down market, which could be heading into a bear market, is that stocks go through personality changes. When the relative strength, which shows swings from bearish to bullish and vice versa, changes color, the stock has undergone a personality change. It's particularly important and powerful when it confirms a power gauge rating, because then the market, in the form of the relative strength indicator, is agreeing with the model. And no matter how good your fundamental research is, no matter how good my model is, or Value Line or Investor's Business Daily, if the market's not agreeing with you, you've got two things happening. You've either got dead money, or worse, you've got a stock making new lows, and that's painful. You lose sleep over that, your mood changes, and you're not focused. If Chaikin money flow confirms the personality change, that's the final piece of the puzzle, and we're going to see examples of that with that yellow zigzag up and down as we get into our presentation. So what does a classic bear look like? Well, here's Whole Foods. Great place to shop. It's expensive, but it's been a terrible stock. The power gauge rating turned bearish in October of 13 when the price was about 56. The stock was still outperforming the market. But then they reported a negative earnings surprise. That's why earnings surprise is one of the factors in the model. And the relative strength went from green to red. Whole Foods underwent a bearish or negative personality change. And that's really important. You've got to know how to recognize those so that you're not on the wrong side of stocks in your IRA, your 401k, or in your trading account. As soon as that happens, that stock becomes an eligible stock for short sale or put buying. And there are numerous examples of bearish gaps down after negative earnings surprises. The one right here in April was preceded by a sell signal. We call this a relative strength sell signal. 30 seconds on that. Doesn't have to be complicated. If the stock is underperforming the market and it rallies above its 21-day exponential average and then drops below it, that triggers a relative strength sell signal, and we'll show you how you can find them in Chaikin Analytics very easily. So Whole Foods is a stock to avoid. It's still expensive on a price to sales ratio even after dropping 50%. So you can buy a supermarket chain for 20 cents, 25 cents on revenue like Kroger, but with Whole Foods you're still paying 1 times revenue. It's too much. This is a fad stock that's lost the fascination of Wall Street. Now here's Adobe, which has had multiple personality changes. So this is a schizophrenic stock. But the power gauge turned bearish in March, and our discipline says that's the right time to get it out of your long portfolio and start looking at it as a short sale opportunity. Now, can the stock rally after it has a bearish power gauge rating? You bet it can. That shouldn't bother you in the least because there were better stocks to be buying than Adobe. You could have been buying Oracle. You could have been buying other software stocks. You could have avoided the group, which is now weak from a power gauge point of view. But the bottom line is this is a stock that's starting to look like Whole Foods. It's rolled over. That's the Wyckoff distribution area up here. And now it's trending down. And this stock looks like a stock that may have a lot more to go on the downside. But the key is don't guess. Just get it out of your portfolio, take it off your long radar screen, think of it as a short sale candidate. And here we see an example of that. Overbought sell, very timely. This one didn't work. They don't all work. About 66% of them work. Anybody who tells you that their signals work all the time is someone you should just run away from. And if they get you on the phone, hang up, because that's never the case. So now let's look at the classic bull, because there are opportunities, and there have been over the last 4 years, that we've identified with the power gauge rating. Power gauge rating's bullish. We're looking at Southwest Airlines as our poster child. Trend is up, outperforming the market. Strong Chaikin money flow telling you the institutions are buying it, and then a buy signal in Chaikin Analytics. Here's the reverse of Wyckoff: accumulation, breakout, move higher, consolidation, and so forth. These are all actionable inflection points, and we help you find them with Chaikin Analytics. So let's look at Southwest Air. 1 year chart. Power gauge rating is bullish for the whole year. Relative strength has been bullish for over a year. There's no personality change on this chart. That all happened earlier in 13. So this is the ideal combination. And then when Chaikin money flow shows you that the institutions are buying it, even on dips, the money flow stays green or positive. If you use stockcharts.com, they put it up as a blue indicator. I prefer the red-green because it's so clear. And then you look for buy signals in Chaikin Analytics to enter swing trades, to buy call options, to add to a long position in your 401k. This average shows what happened when Love, Southwest Air broke out to the upside. Most recently, you got a buy signal here. The stock responded, and the market rallied yesterday, and you've now got the market way down today. Ebola fears. You've got to think differently in a downtrend or a bear market than you do in a bull market. In a bull market, you want to find any excuse in the world to buy a stock like Love In a bear market or a downtrend, you want to be patient. So the first thing we're going to talk about is playing good defense. Defense means three things to me. Using stops, particularly important in a downtrend. Why? Because you don't want to let one bad trade or one bad investment ruin a whole year's worth of positive results, and I've seen that happen. Secondly, if a power gauge rating turns bearish, you want to get that stock out of your long portfolio. You want to start thinking of it as a put candidate, and you want to make sure that you're not trading it from the long side. Put the odds in your favor. Finally, I'm going to show you how to turn lemons into lemonade by buying put options on stocks with bearish power gauge ratings. So here's the first example, Amazon. Big darling of Wall Street. They finally tired of Jeff Bezos' strategy of buying revenue. They do over $80 billion in revenue, but they don't make much money, if at all, depending on how you treat options accounting. It's got an 834 PE if you treat options as an expense. Now that's an expensive stock. Power gauge turned bearish in January. It was outperforming the market. The stock was over 380. Underwent a personality change. The relative strength went from bullish to bearish, turned from green to red. That's a big combination. And now you want to look for short opportunities. This is our overbought sell signal. One of them came just before an earnings report in July when Amazon disappointed again. They did it here in January, then again in April. I made that my bearish stock of the week in Market Insights back in April. That worked out very well. Stock gapped down about 50 points, and it happened again in July. This is what happens when you disappoint Wall Street. Stocks get taken to the woodshed. So you want to avoid these stocks. Even though they can rally, there are better places for your money, help you sleep better at night. Another example is 3D Systems. 3D printing was all the rage in 12 and 13. The stock spiked up to 95 and change. And then Wall Street soured on it. Barron's did a negative story last January. Stock experienced a power gauge that turned bearish in January here at around 75. Then it underwent a personality change. Relative strength went from bullish to bearish. This is over a 26-week period, and it measures persistency of underperformance or outperformance. And look what's happened subsequently. This stock has been underperforming the market. Made it my bearish stock of the week back here in August when it was 50 and change. Pacific Crest Research has a price target of 32. That looked pretty outlandish at 51. Doesn't look as strange now with the stock trading earlier today at 41.40. These are the stocks you want to avoid. The institutions are avoiding them. They're selling them. How do we know? Look at that negative Chaikin money flow. Contrast that to what they were doing when the stock was going up. They were accumulating it. Now they're disgorging it. It's ugly when institutions are selling a stock that's underperforming the market. So how do you play offense well and make some money and take advantage of opportunities? Remember, Warren Buffett said you want to be greedy when others. And what playing offense well means is knowing what to buy. And in a bull market, that's really all you need to know. In a downtrending market, you've got to know how to buy because the rules change a bit. So let's look at some examples of that. Here's Apple. When the power gauge turned bullish in April and it underwent a personality change and the institutions are buying it, the stock is hard to buy. You need to find any excuse in the world, even a sideways move which gets our overbought, oversold oscillator oversold is a good buying opportunity. These are oversold buy signals. Now that the market is in a downtrend, not yet a bear market, but watch carefully as we break 1926 again, the double bottom of last week and this week. Now you want to wait for better entries. So there was a good entry here at our long-term trend line. An even better entry would be 95, the lower volatility band. You're probably not going to see that. Apple was actually up today with the market down 32 points. Why? Because Merrill Lynch recommended it 2 days ago with a price target of 120. Oppenheimer recommended it yesterday, and they've scheduled a special meeting to talk about positive developments, and Carl Icahn is saying make a big tender offer. So you want to, in a downtrend, buy stocks better and cheaper You don't want to be as aggressive as you do in an uptrend, so it's the how you buy that changes in a downtrend. So far, this long-term trend line, which is around 98 and 50, has held. I'd prefer to buy it at a lower volatility band, and here's an example of that. Skyworks is part of the Apple ecosystem. They make chips for the iPhone 6. And it had a bullish personality change back here in November of 13 with the power gauge already bullish. And this stock was in a very sharp uptrend. It respected this 200-day average, and every time you got an oversold, which is an 8-day low with a bullish power gauge rating, very simple technique that I learned from Larry Williams, which works beautifully in a bull market. Not going to be the absolute low day, but it puts you on alert that there's an opportunity in Skyworks. Now, Skyworks had had a series of positive earnings surprises. I made it my bullish stock of the week back here in July because it had triggered a second buy signal, a money flow buy, right before earnings were due out. So history repeats itself in the stock market. Positive earnings surprises in January and April, and then they did it again. And the key is the market is agreeing with the model through this whole period, and Chaikin money flow is very strong. Actually stays positive even when the stock pulls back, very similar to Southwest Air. What happened after the earnings report? Big gap up. Very often that's a great place to take some money off the table, partial profits. You can always buy back in if it pulls back, which most stocks do, not all. Pulled back to the 21-day exponential. It's so strong with everything in gear that it made new highs even after the Apple iPhone 6 launch. There's another oversold buy signal. Now that the market's in a downtrend, it peaked on September 18th, and we'll be happy to talk about the market in the Q&A. Now it's broken this long-term trend line, and now the lower band is proving to be support. So in a downtrend, how you buy is as important as what you buy. It's sort of like the old Dr. John song. Any old rock and rollers out there? I've been in the right place, but it must have been the wrong time. So in downtrends, the right time is very critical. Now, since we're looking at the Apple ecosystem, even though we're in bullish stocks, the next example is going to be a head turner. But before we get to that, we got a testimonial from someone who actually followed our bullish stock of the week on Skyworks before the earnings were reported. Said, I bought Skyworks before earnings the first week I subscribed to the service, and that trade paid for my entire yearly subscription. Thanks and compliments on a user-friendly app. That was July 21st. We made it our bullish stock of the week on July 17th. This was a trade that went from 47 to 54 in less than a week because they reported a positive earnings surprise. So in the same Apple ecosystem, GTAT, they were supposed to make sapphire glass for the iPhone 6 and for the iWatch. And the stock got bid up a number of times. The power gauge turned bearish in November. The stock was 9. That basically said, watch out. But the relative strength to the market was strong. In May, bearish again, still strong. Look what happens in July. It turns bearish at 17, and the relative strength goes bearish at about 15. Personality change, negative. Institutions start selling it. In spite of that, it ran up ahead of the iPhone 6 app. You would have known to sell this stock. Then we got a momentum breakdown signal at a price of about 16, and this company filed for bankruptcy 3 days ago because when the iPhone 6 came out, there was no sapphire glass. So here's an example of where the Chaikin power gauge rating and the relative strength and money flow can help you identify stocks where you're at risk. In a bear market, there are going to be hundreds and thousands of these stocks. In an uptrending market, you still want to avoid them. No sense in putting your assets in harm's way. So contrast that to Skyworks, which is in the same field. They supply chips to the iPhone. GTAT provide glass to the iPhone. So 6 pairs of buy and sell signals. We've covered a lot of them in the webinar. We'll cover a few more. How do you find them? Well, before we show you how to find them, here's an example of a stock where the power gauge turned bullish 2.5 years ago. Rite Aid, big drug chain, had some problems. Stock went from $1.20 to $8, and the power gauge was either bullish or neutral the whole way, but the relative strength was bullish. Then in April, institutions started selling the stock, and we had a personality change. Back in June, when it broke below this long-term trend line, power gauge went bearish for just 1 week only in here, but look at the negative money flow. The institutions knew something. They were getting out of the stock, and you had a bearish personality change. Right before earnings were reported, it triggered a relative strength sell signal by dropping back below its 21-day exponential when the relative strength was negative. So all of this webinar is meant to show you that you can do this with tools like this, visual tools that make sense, that are based in a big model and very grounded. Wouldn't you have liked to have sold Rite Aid at about 640 on the way to 460? I certainly would have. The institutions knew something. So how do you find these? When we introduced Chaikin Analytics in January of 13, people said the signals are great, but how do I find them? So we created a dashboard alerts in our iPad app and a dashboard click-on capability in the desktop, which we hope to show you in the Q&A period. So yesterday in Chaikin Analytics, in the 100 stock list that I follow, called My Stocks, 3 signals triggered on the buy side. Gilead was one of them, and 9 signals triggered as sell signals. McDonald's was one of them. It's been very bearish. A lot of other stocks the same way. So the signals are pushed up to you. You can look at them in the SP 500, in our all signals list, in any ETF, any other list you create. This is the first thing you see in the morning, the dashboard telling you that there are actionable events happening as we speak. They prepare you for the next day's trading. They're based on the previous night's close. So they're not intraday, but they're good for swing trading. They're good for short-term trading. They're good for longer-term investors who are looking to put money to work, in this case on weakness in the market. So we're going to go to industry group strength very quickly, because industry group strength or weakness is really the key to profits when combined with the Chaikin power gauge. Weak groups and sectors are short opportunities or put buying opportunities. Strong ones, strong weak sectors and groups put the wind at your back, and they yield long profits, profits on the long side. So how do you find these? Well, in Chaikin Analytics, we've got a user interface that makes it easy to drill down and zero in. So in this case, we're looking at ETFs as a surrogate for industry groups. We have sector ETFs. There are 9 of them in the S&P, and then we have subsector industry groups, and you've got 20 of them. So what I do is I take the industry group listing, and we rank them differently than anyone else. Most people look at price momentum. We look at the power gauge ratings. We're looking under the hood. And so home builders were the second weakest ETF, or one of the bottom 5 rather. 5 stocks had bullish rating, 15 had bearish. If you tap on it, this display comes up. It sorts every stock in that group. There are 34 of them by power gauge rating. So at the bottom, I saw 2 names that I'm familiar with, 3 actually, Lumber Liquidators, which is a total disaster. Toll Brothers, major home builder based here in Philadelphia, and USG Corp. So I first looked at the chart of the XHB, the Spider Home Builders Index. I confirmed that, in fact, the price action was weak and the relative strength was weak. It actually went through a bearish personality change back here in March. So the group shows up as weak, and when you look at the chart, it confirms that. Now I want to go and look at the individual price charts. Now, what if you had been doing this back in late August? Same weakness in the rankings. Here's a stock with a power gauge that's been bearish for over a year. Even though everybody's talking about a home building recovery, it doesn't show up in Toll Brothers or KB Homes. Bearish personality change in March. At that point, you're looking for put buying opportunities. You want to get this stock out of your portfolio. And just recently, when the stock rallied up to the upper band and the long-term trend line, triggered a relative strength sell signal. And that was a wonderful spot to short the stock or buy puts. It went from about 35.5 to under 31, and it's trading under 30 today. So excellent opportunity. Now, if home building is weak, you would expect that companies that provide building products like USG, which used to be called US Gypsum, they make wallboard. Obviously, wallboard goes into new homes. That's likely to be weak, and the power gauge confirms that. Turns bearish in March. Stock undergoes a personality change to the downside in April, trading at 31. Here's a stock that was under 26 today. This all makes sense logically. These things have to pass the reality or smell test. So USG to be avoided, Toll Brothers to be avoided. Now, how do you take advantage of weakness if you want to add to an investment portfolio or find long opportunities for a bounce like we had yesterday? Well, look at the S&P 9 sector spiders. XLV is the healthcare spider. 17 stocks with a bullish power gauge rating, only 2 with a bearish rating. And that's where you want to look on the long side. The best performing groups, unless they're defensive stocks like utilities and food stocks, are the place to be for a rebound. So you tap on healthcare sector and you put up the chart and you confirm, just as you did with home builders, that yes, this is a strong acting sector. In fact, with yesterday's rally, it came within a point of its high, even though the market was way down. And the relative strength is positive. It's been positive since late July. So this is a group, a sector, where you're looking for long ideas. So the first thing you do is look at the dashboard. Amgen and Gilead and United Health all triggered buy signals as of last night's close. Actually, and one Bristol Myers triggered sell signals. So you're looking for buy signals in a strong sector or industry group. You tap, and this is what that display looks like. All the stocks, the 55 stocks in the healthcare sector, all in the S&P 500, come up sorted by power gauge rating. I've highlighted 2 of them. Gilead Sciences, which triggered a buy signal. The previous day also triggered a different buy signal. It was up 4.5 points yesterday in that big rally. It was up over 4%. CareFusion, let's see what happens in a minute with CareFusion. So Gilead, a buy signal 2 days ago led to a 4.5% move when the market rallied like it did. So here's one where there was a bullish personality change. You want to look for opportunities to buy this stock. Community Health, another example. Managed care stocks benefiting from Obamacare had been underperforming the market. We got a series of relative strength sell signals. Power gauge turned bullish in May. You got a positive personality change. You went from negative relative strength to positive. Institutions were buying it, confirming the change of personality. Now you're looking for opportunities to buy this stock. It's held well above its trend line. You want to buy it down at the lower volatility band or between the lower volatility band and the trend line, which is roughly 50.5 to 52, trading at 54.60 yesterday, trading down around 53 today. Now let's look at what happens if you get lucky and you were doing the same exercise 1, 2, or 3 weeks ago. You would have found CareFusion, because just as it was at the top of the rankings, it's been at the top of the rankings. So power gauge turned bullish in May. Relative strength had a personality change. Institutions were buying it. Series of oversold buy signals. The last one came 10 days ago when the stock closed at about 44.50. And then you get lucky and Becton Dickinson makes a takeover bid because the power gauge focuses on value metrics as well as earnings and price momentum. And obviously Becton Dickinson saw what the power gauge saw. We have power gauge ratings on 5,000 stocks. You couldn't possibly do this research yourself, but you can zero in on the best opportunities in healthcare or the dangerous opportunities in building and home building. So you can also use our ETF capability to trade index options or ETFs like the SPDRs, triple Qs, and the IWM small caps. So how do we help you in that regard? Well, there's no power gauge rating yet on that. We're working on it because it's an ETF. But in June, the triple Qs had a personality change. So you have 3 choices, really. You can buy large caps, that's the SPDR. You can buy tech and biotech, more volatility, the triple Qs. You can buy small caps, IWM. How do you know which to do? Well, you look for which of these is outperforming or underperforming. If none of them are outperforming the SPDR, you want to buy the SPDR. If the triple Qs are outperforming, you're looking for opportunities to buy the triple Qs. Notice how the volatility bands have held. It traded below the trend line, so downtrends are different. And a big rally yesterday, which has lost esteem today, and you're actually breaking the lows earlier today. But if you're looking to get long the market through an ETF, it's the triple Qs. Would you buy the IWMs? Hell no. Why? Because it underwent a bearish personality change here in March, underperforming the S&P, and look at the fact that it couldn't get through that long-term trend line and didn't make a new high on September 18th by a wide margin. It was actually down 8% from its high when the S&P closed above 2,000. So these are the sectors and the market caps that you want to avoid. You want to focus on the triple Qs, not the IWMs, and the relative strength is your clue, as well as this trend line. So we're going to end the webinar with winning plays during earnings season. A lot of traders are afraid of putting on positions during earnings season because stocks are wildly volatile. We're going to see 3 examples of that in a minute. And the power gauge gives you some really powerful information that helps you make money during earnings season on both the long and the short side. Alcoa is a stock that had a bullish power gauge rating in July. They lead off earnings season. Based on that, I made it my bullish stock of the week. The stock was $14.98. They reported better than expected earnings, and the stock continued for 2 weeks up to 17. Money flow was strong. Relative strength was strong. Stock pulled back, gave an oversold buy signal, moved back up to a double top. Now, what happened at that double top? Chaikin money flow failed to make a new high. For those technicians in the audience, that's a negative divergence. And money flow has continued even weaker with selling pressure below this red line, this red indicator here. Now, what happened yesterday? Alcoa kicks off earnings season. Alcoa reported earnings after the close yesterday. The power gauge had turned neutral based on valuation factors. So we didn't really give you an edge. Back here in July, we would have said buy Alcoa. They're likely to surprise to the upside. Well, what happened today? Alcoa actually surprised to the upside. But because the institutions are selling this stock, the market's weak, and the power gauge is neutral, not bullish, Alcoa, which traded up 3% in the pre-market, is actually down 3%. So that's a 6% swing in real trading. So when the power gauge is not bullish, you don't have that edge. When it does, you do have the edge, and you can buy Skyworks or Southwest Air or Alcoa before earnings and use call options. You can use short-dated call options to limit your risk and make a lot of money during earnings season. Now, the flip side of that is Sears. Negative power gauge rating, negative relative strength, a lot of institutional selling, bearish earnings surprises. This is an opportunity. Ahead of these earnings reports, you can buy put options. Now, we had another one. It's very subtle because this stock is down so much here in August. We made this our bearish stock of the week. The stock was 34. They reported a negative earnings surprise. It dropped 10% to 30 and change. It rallied. Now, here's another example of conviction. If the power gauge is bearish, stock is underperforming the market, and there's negative Chaikin money flow, you're not going to get sucked in by a rally like Sears just had from 24, a new low, all the way up to 30. Look what Sears is doing today. When I took this chart, it was 27.70, down 4%. It's down 8% right now when we started the webinar. These are selling opportunities. You don't want to get sucked in and bottom fish, and you don't want this rally to kill your resolve. If you're short Sears, obviously you need a stop. But if you're looking for a spot to go short or buy put options, don't be fooled by this rally. Wall Street's irrational. Who knows why the stock rallied? Short covering and so forth. The key here is you follow a methodology that you believe in. You're going to have conviction, and conviction leads to profits in the market. So I obviously feel very passionate about Chaikin Analytics. I came out of retirement to start this company to create the kinds of tools that individual investors need to beat the market, to compete with the big institutions. Now, some of the big institutions are old clients of mine, like the Fidelity mutual fund technical department is using the product. George Soros and his hedge fund is using the product. But for you, this levels the playing field. So we have a webinar special. An annual subscription to Chaikin Analytics is normally $1,950, and it comes with a lot of additional perks. As a webinar special for the Trading Pub community, we've reduced the price by $400, $1,550. You can get that by going to chaikinanalytics.com/signup, enter the offer code PUB, or email danf@chaikinanalytics.com. Now, here's what you get with Chaikin Analytics. Most importantly, one-on-one tutorials to help you get set up to speed, know what features are there, and how to use them. This is really critical, and we do that with every new subscriber. We've just instituted a bi-weekly exclusive open forum for Chaikin Analytics subscribers where you can call in, ask questions, get user tips from our experts. This has gotten a fabulous response. People love it. We're getting feedback. It comes bundled with the subscription. It's not extra. Additionally, you get research reports on 5,000 stocks based on the Power Gauge, updated nightly. Our very important portfolio health check, and if we have time in the QA, I'll show you that. Highlights changes in the Power Gauge, stocks that are reporting earnings, also highlights potential swaps out of weak stocks into strong. And then finally, my Market Insights weekly newsletter with the stock of the week. So if you flip the iPad, you get a research report on the chart and the stock you're looking at. Very convenient. You can email it to someone. On the desktop, you just click on a button. Same thing with Portfolio Health Check for any list, ETF, or hot list in the system. You can get a Portfolio Health Check instantaneously. So one final testimonial. Amazing results, 5 for 5. Lululemon, Skyworks, ServiceNow, Demandware. 3 of those were shorts, 2 were longs. I just closed out Demandware, which was a short, for a 14% profit this morning. I've only been a member for a couple of months and have already paid for your annual membership fees several times over on just these 5 stocks. Thanks for your solid advice. And this came on August 5th, and we've had a series of other successful recommendations in our Market Insights. So that's meant to give you an idea of the way I look at the market and how I find winners on the long and the short side. But the takeaway from this should be that you can do it. You can be independent of Wall Street gurus like Jim Cramer and Marc Chaikin, and you can become self-sufficient, and that's really the key to long-term success in the market. There are a lot of services out there that are very valuable. I don't knock them at all. I'm very respectful of that. But if you can develop a methodology that works for you, you're going to be self-sufficient and sleep better at night because you understand why you're in the stocks you're in and trading the way you're trading. That's really critical. So invest smarter. Start now and get $600 in added value. You get $400 off our annual subscription, complimentary subscription to Power Suite, which are those 3 research services that's worth $190 a year, and that price is going way up on January 1. And free one-on-one tutorials plus this bi-weekly open forum call-in session. And I think that's really powerful, and it completes the circle because any questions that you have as you're using it are going to be answered by our experts. So I'd encourage you to subscribe now, sign up today. This $1,550 offer is good until midnight Sunday, October 12th. So you've got plenty of time to think about it. Go to our website, chaikinanalytics.com. Enter trading code PUB if you want to sign up, or call Dan Franz at 877-MY-PORTFOLIO, or email him at danf@chaikinanalytics.com. So with that, I'm going to end the PowerPoint version of this, and I think the Trading Pub people will curate the questions. If you can, that would be very helpful because I like to put this up in full screen. So what I would encourage you to do is to ask questions on any stock or any thing we covered in the webinar, and we'll give you our best shot.
Well,
So is our
that's
moderator?
great, Mark.
I'm
And
sorry.
I'm going to be here to help you out. I'll be monitoring the question panel, and I'll feed you questions and also some stock recommendations right off the bat. We have a trader wondering about AA. I guess that's American Airlines.
No, that's actually Alcoa. We covered that in
Oh,
the
Alcoa. Okay.
webinar. They reported a positive earnings surprise. I'm going to look at the overbought sell signal, oversold buy signal, really, rather. This is a surprising price action. The stock was up 3% in the aftermarket trading after they reported a positive earnings surprise, but it's below our long-term trend as opposed to July when it was above it. There's money flowing out of the stock, and this is a stock which is succumbing to the weakness in the market. I see that the Standard & Poor's has given up all of yesterday's gain, and I'll be happy to talk about the market if you'd like to. But Alcoa is a stock which clearly surprised to the upside but is acting poorly. The market rules. If you ever think you're bigger than the market, none of us is, and the market is clearly voting with its feet and saying no.
Sure. And once again, you can tell, Mark, I'm a futures trader and a frequent traveler.
There you go.
But
Well, we could.
there are a couple other that have come in. One question, Ella says, could you look at BABY, baby?
So this is a medical stock. It's not one I'm familiar with, but here's one of the beauties of Chaikin Analytics. I get an instant read on this stock. If I want to find out what they do, I click here on the I button and I see that they do screening, detection, and monitoring for medical ailments for newborns, particularly, thus the name. And the power gauge has been bullish off and on for the last year. It was outperforming the market, had a bit of a personality change here, and then in mid-July, when relative strength went positive with the stock at about 27, the stock now becomes very buyable. Look at all this very positive money flow confirming the relative strength. So this is a stock I'd want to trade from the long side. Let's see if there's been a relative strength buy signal. There were a couple of them, and these are all terrific entry points. It's based not on the power gauge but on relative strength, and you see the money flow confirming it. So in a downtrend like we're in right now, you want to buy on weakness and you don't want to pay up for a stock. So when it's at the upper volatility band like Baby is now, you want to wait for a pullback. That's a good spot to take some money off the table if you're a trader. If you're a long-term investor, you just prepare yourself for a decline at least to 29 and maybe to this lower band at 27.
Wow, that's great. And I tell you what, a terrific demonstration of your platform. As you said, this is not even a stock that you're familiar with, but instantaneously your platform and your dashboard and your power gauges tell you everything that you need to know.
And let's do one other thing. I said you could get research reports instantaneously. You click on the power gauge report and you get a 4-page PDF research report that was updated last night based on the power gauge. It explains all these 20 factors in plain English. And at the bottom is a competitive analysis. You can see other stocks in the industry group. Edwards Scientific, I do know. Holex have bullish ratings. Other stocks like Varian and Intuitive Surgical have neutral ratings. But instant access to research on 5,000 stocks comes bundled with the system. You can create a PDF, print it out, mail it to a friend, keep it in your file to remember why you bought the stock. But very powerful instant access to any of 5,000 stocks.
Wow. Another one that's just come up here is STV.
STV, China Dig TV. Again, power gauge bullish all through 13 and 14. You would have been a buyer of the stock in here at 175, ran all the way up to $5. I don't like the money flowing out of the stock here. There's an extended period of negative money flow, but the power gauge is bullish again. It's outperforming the market with positive money flow. So again, with the stock at the upper volatility band, we saw how that turned it back here. You're in a downtrending market. In an uptrending market, stocks will trade up through the upper volatility band until they make a double top like Alcoa did and this one did. And so eventually the upper volatility band lets you know that the uptrend is running out of steam. So not here, not here, when you're outside the band, but when you rally up, make a double top like we just did here in STV, and it can't penetrate the upper volatility band, it's slightly above it. That's a spot to take money off the table unless you know some event is impending. You don't want to pay up for a stock like this in a down market.
Sure. Another stock that was mentioned here, Marc, is SNCR.
SNCR, again, these are stocks I'm not familiar with. Power Gauge went bullish in June. The stock was still underperforming the market, but lots of positive money flow. And then on this breakout above 40, the relative strength turned positive. And look at the institutional buying. So Power Gauge bullish in here. If you know something and it's above its long-term trend line and the money flow is positive, relative strength might have encouraged you to buy it in here at 35 because it did turn slightly positive. The real kicker was that spike up about outside the upper band. It was probably a positive earnings report. Let's just see quickly what the company does. Computer software and services, on-demand software. We could see the fundamentals if we wanted to just by clicking over here. So we see what factors contribute to the Power Gauge rating. I see it's got a PE of 41. I want to see the price to sales. I'm betting it's going to be high, so I'm not going to. Well, it's only 5 times sales. Compare that to some of these high-flying stocks like Triple D, which are selling at 10 and 15 and 20 times revenue, and that's not bad for a technology stock. So interesting name. Never saw it before. Again, you could get a research report in a heartbeat. And I do want to show the portfolio health check because that's really powerful. So my stocks, I'm following 100 stocks. That's way too many for you. You should follow 20 to 30 max, in my view. But I can get an instant read on those 100 stocks. Immediately zeroes in on the bearish names. Tells me which stocks have had a change in Power Gauge rating. So eBay and Facebook went positive last week. Tells me which stocks are reporting earnings this week. And then it recommends swap ideas. So if you're in Tesla, which has a bearish rating, it's telling you to buy PCAR. If you're in Lumber Liquidators, it's telling you to buy Home Depot. And then we do this power grid. You want to have your long trades in the upper right, Costco, eBay, Apple, Deckers, Nike, JP Morgan, Community Health we've looked at. You want to avoid the lower left, KB Homes, USG we looked at, Toll Brothers, GTAT. It's all there. It's clear for you. So one final thing, we've introduced this new container so you can actually see the Market Insights newsletter that I do every Sunday. And let's see what I said here. I said that the market had reversed, but I said in October you're going to see a very volatile month for stock prices. Price declines are typically reversed very quickly. Boy, did we ever see that yesterday and last Friday. And we need to close above 1975 to establish a new uptrend. If that level proves to be resistance, then expect a test of 1926. We saw that yesterday. That test failed right at 1970 yesterday and early this morning, and you've come back down, and this is looking a little ugly now. This was not meant to be a market call on the webinar, but if we break 1926, at a minimum we go to 1900, and since everybody's focusing on that as the buy point, my guess is that between now and the 22nd of October, we might break that and really scare people. So be prepared and use the Power Gauge to keep yourself out of trouble and find opportunities. And with that, I'd like to thank everybody for attending today and thank the Trading Pub Trade-a-thon people for making this such a seamless experience for me. You guys are great.
Well, thank you so much for that as well. And Marc, I certainly do appreciate your time today, not only to put together this presentation, but to deliver the material. I just very, very topical. You're right on point, and I appreciate you changing the focus of your presentation just to basically leverage what we all see going on in the market just this week alone with all the volatility that's going on. And I really just like the fact that you used and showed how you use your package to identify high potential stocks to trade. And I like how you combine fundamental and technical analysis to help you rationalize your decisions. For example, it just comes to mind how you talked about Apple, and then also, why not focus on a couple of its key vendors to see what they're doing, like the chip maker. I can also really see how your dashboard and your power gauge could save just a ton of time in quickly identifying sectors and stocks that are presenting attractive investment opportunities. And as you said, if you're tracking 5,000 stocks, I'm just not sure we can humanly do that without the benefit of a powerful engine like the one that you have. I also want to thank you for the special offer that you put together for Trade-a-thon attendees on your annual subscription to the Chaikin Analytical Trading Package. And if I did my math correctly, it's about a 25% discount. It's a $400 discount, which includes the research reports, the Stock of the Week newsletter, and the bi-weekly Q&A session that Marc provides to its clients. So once again, just a tremendous offer there, and I really do appreciate Marc's time and certainly do respect the nearly 40 years of expertise and knowledge and information that he brought to the room today. Well, folks, we are running a little bit ahead of time. We have about 11 more minutes to go, but I think this might be a good time for us to take a little bit of a break, waiting for the next speaker to come here, and we'll just kick things off in just about 10 minutes or so. So now would be a good time to get up, stretch your legs,